Let us now get reaction from someone who's been there at the Fed. Michael Cox is the former chief economist and senior vice president of the Dallas Fed. He spent more than 2 decades there. He's pretty ticked off by this Fed. Really, Michael Cox? You're live in Dallas. Why are you angry?
Well, I just feel like the Fed, and I've said this, has it backwards. I feel like the paradox here is that low interest rates aren't the solution to the economic slowness. They're the problem. That's what's causing the slow inflation. That's what's causing the slow growth. And here's why. The capitalist economy runs on the backs of credit and capital. The way that we expand the economy is that businesses get loans from banks. The bank prime rate right now is at the lowest rate since 1956.
Okay, can I interrupt you here?
Years.
Why am I worried about the banks? I'm worried about savers, and clearly Loretta Mester is too. She wants to see these rates now at less of an emergency level, which is 0. She says, come on, let's do a quarter of a percent. But so does Janet Yellen. She says by the end of this year. Surely you're angry more that the message is different from the actual action.
Well, absolutely. But I think that again, to stress, the way to get the economy going is to raise rates to the point where the banks want to make loans. And then right now the banks are holding 25% of their deposits in the form of reserves. It was 1% in December of 2007. Now it's 25%. They don't want to loan because rates are too low. If they don't want to loan, businesses can't borrow. You can't get the economy going again. So there's 2 ways. There are 2 ways that policy is correct. To get the one that Deborah Mester was talking about.
Loretta.
I'm sorry.
Yeah, that's okay.
President Mester was talking about is having higher interest rates for the savers, but also having higher interest rates for the lenders who themselves, the savers, the same people, can finally be willing to loan their money. So I think that's the paradox.
Would you say raise rates in October?
I would. I would say go ahead. The economy not only can stand it, the economy needs it for this reason that I'm talking about.
All right, then you're in agreement.
We're in agreement.
With agreement. Michael Cox, we must go. Thank you so much. We appreciate it. He's fired up, but he agrees with Loretta Mester. We can at least handle a quarter of a rate point hike, but she's not a voting member. She will be after January 1.